share. So, warm welcome, Cecilia Wiedebeck, Operations Director of Boards Impact Forum.
I know that a number of people are still trying to get into the webinar, but I'd like to welcome to you to this one, which is arranged by Climate Governance Initiative in collaboration with World Economic Forum. And Climate Governance Initiative has a mission to support non-executive and independent directors by enhancing their skills in climate governance and climate action. And of course, to ensure that we get accelerated results. And on that note, to also promote the principles for effective climate governance as a good tool. And Boards Impact Forum is hosting this on behalf of Climate Governance Initiative. Take the next one. And the agenda for today is to discuss implications on financial flows after COP26 with a board perspective. And we will have a summary of the COP26 with that perspective and also get some perspectives from our panelists. We'll have a brief poll and then a moderated discussion and a Q&A with the panel and then conclude. And please share on social media. For questions to the panel, please use the Q&A function, but you're also welcome to share your reflections on the chat. And when it comes to who's participating in this webinar, we have approximately 34 countries participating, Nordic, German, Hong Kong, but also from the rest of Europe, Asia, Africa, North and South America. And now I'd like to hand it over to Liselott Engstam, who is the moderator for this webinar. She is the chair of Boards Impact Forum and a board member of Climate Governance Initiative and a professional board member as well. Liselott, over to you.
Thank you so much. And thank you to everybody who's joining this webinar. As it shows that you're prioritizing this very important topic. We just wanted to start out with that from the Climate Governance Initiative. We today shared a statement which we think summarizes on a very high level our perspectives. And that is that the COP26 brings a mix of hope and concern. But it clearly shows that boards must now lead to reach the net zero by 2050. And we're also sharing and re-emphasizing that the World Economic Forum's climate governance principles, they are there to help boards guide the journey and accelerate the action. Now, let me introduce to you our fantastic panel. I'm so glad to be able to introduce to you Laura M. Cha, who is who's a professional board director. She's the chairman of Hong Kong Exchanges and Clearing. She's also a NED at Unilever, and she is a senior international advisor to FAM in Sweden. She is a director of the World Federation of Exchanges, and she's the vice chairman of the International Advisory Council of the China Securities Regulatory Commission. So warm welcome to you, Laura.
Thank you.
And Werner, Dr. Werner Schnappau, he's the chair of German Council for Sustainable Development. And he has worked on this topic for many years in different roles. He is now a senior advisor to Bank of America. He's a partner at Graf von Westphalen, and he has a number of chair and board positions under his belt. We're also very glad to welcome Severin Nervort. Some of you noticed that we would have Karina from the Norwegian Bank Investment Management joining us, but unfortunately she got held back for other things. And Severin, we're so glad to have you. You are a senior analyst and you represent the Norwegian bank in International Corporate Governance Network, in the Natural Capital Committee, and SASB Investor Advisory Group. So you have a very strong insight into a number of the topics we're going to talk about. And finally, but not least, I'm super delighted to introduce Magnus Billing. He is the CEO of Alecta, which is the 5th largest pension fund in Europe, with a very special approach to investment. I think he's going to come back to that. He's also the chair of Stockholm Sustainable Finance Center, and he was the previous CEO of Nasdaq in the Nordics. So warm welcome to you all. We're delighted to have you. We are going to start out with Dr. Werner Schnappauf, but before that, I just want to let everybody again know you can put Q&As on the topics to the presenters, but we want you to take out a paper and actually scribble down what are your reflections from the different speeches and what impact do you think it will have on your boards. And whatever reflections you come up with, please share them in the chat. And if you have some good practices or emerging practices, please share that with us and each other. So, Dr. Werner, we are fantastically impressed that you have now pulled together a summary for us, and we invite you to share it. Warm welcome.
Thank you very, very much, dear Liselotte, dear Cecilia, ladies and gentlemen. I myself, I'm delighted to have the opportunity to share my views on the outcome of COP26 in Glasgow with you. But first of all, I would like to thank the Climate Governance Initiative and the board's Impact Forum, Liselotte, for the organization of this timely and very important panel. So let's have a short look at the political context. If there had been any doubt after Glasgow, it is crystal clear for everybody. Climate neutrality is at the top of the political agenda. And a second aspect is also crystal clear. Time is the scarcest resource in this transformation. We urgently need a decade of transformative action to keep the temperature goals of the Paris Agreement within reach. Having said this, Liselotte and ladies and gentlemen, let me jump directly into my assessment of the results. Summarizing, I would say that COP26 has taken important steps to keep the Paris temperature goals within reach. Nevertheless, much more will be necessary to deliver this change in the coming years. We need concrete action. We need a necessary change in the coming years, and also in economy, in the real economy, in industry, as well as in our societies. Now, let me focus on 10 significant takeaways. You see on the screen a chart. So first is the finalization of the Paris Rulebook and the Glasgow Climate Pact. On the closing of the Rulebook, COP26 has done its homework and delivered on issues ranging from international carbon markets to transparency. With the Glasgow Climate Pact, the parties have also agreed on some concrete measures, including a phase out of fossil fuel subsidies, which I personally think is a highly relevant result. Second is the announcement of new climate targets and ambition. Many countries have announced new net zero goals and targets for specific sectors. Following earlier announcements by the EU, US, China, for example, India, Russia, Saudi Arabia, some major emitters and G20 members have for the first time set net zero goals. India, for instance, has even backed this with higher targets for the expansion of renewables by 2030. With recent announcement, and that should be very clear, with recent announcements, 90% of the world has now committed to net zero. 90%. That's an incredible result. Most announcements still lack detail on implementation, but will create space for global innovation markets, which will rapidly grow in coming months and years. So innovation will be key. Third, acceleration of the global coal phase out. Groundbreaking results have been reached on the phase out of coal. Not only does the Glasgow Climate Pact for the first time include reference to a phase down of coal globally, many countries have also ratcheted up their trajectories for domestic coal transitions. More than 20 countries, many development banks, and public financial institutions made new commitments, including large coal burners such as Indonesia, Vietnam, Poland. Very significantly, a group of countries has come together to support a unique just energy transition partnership with $8.5 billion to help one of the largest coal countries, namely South Africa, transition to renewable alternatives. That is really groundbreaking. Point 4, greening of public finance. A significant group of countries and organizations has signed a joint declaration on the end of international public finance for all fossil fuels by 2022, namely including EU, USA, Italy, and Germany. This policy can shift more than 20 billion in public finance to clean energy. 5, fostering private finance for net zero. The UK has announced to work towards establishing the first net zero financial center in the world, including by requiring all listed companies to develop net zero transition plans. Also, a group of partners has launched the Glasgow Financial Alliance for Net Zero, chaired by Mark Carney and Mike Bloomberg. Signatories must commit to use science-based guidelines to reach net zero carbon emissions by 2050 and to provide 2030 interim goals. 40% of global financial assets are now committed to science-based net zero targets. So this is also an enormous result. It shows that capital markets drive and will drive still stronger the transformation. My fellow panelists will certainly elaborate more on this. They have a special expertise on those issues. Point 6, launch of the Global Methane Pledge. More than 100 partners, including the US and the EU, have committed to reduce methane emissions by 30% by 2030, an increasingly serious issue in the climate puzzle. This pledge will especially put more pressure on fossil gas, mainly the leakages along the pipelines, and the transformation of agriculture, and also the food patterns of the people. So, having said these first 6 points, let's have a look at the remaining challenges. Point 7, formulating near-term targets and kickstarting rapid implementation. New announcements and alliances by the EU, China, the US, India, and other high-emitting countries can be basis for rapid implementation and near-term targets by 2030. Unprecedented delivery across all sectors of the economy must now be the focus of all our efforts. For Europe and others, there is a short window of opportunity to ensure competitiveness in rapidly growing innovation markets. The European Green Deal must be implemented as the new growth model for the European Union. This decade, the 20s, will be and must be the decade of action. 8, creating multifaceted global coalitions of the willing. The Methane Pledge is only one example, but we need more similar initiatives, for example, in the field of technology, for instance, green hydrogen, or carbon pricing. The German G7 and the Indonesian G20 presidencies next year will be important landmarks along this journey. Establishing a climate club can be one large step through these political platforms to align global climate ambition and cooperation. Please support these efforts to reach a global level playing field, at least a G20 level playing field. 9, increasing of climate finance for developing countries. Already before COP, an international expert group has developed a roadmap to finally reach the goal of industrialized countries to provide $100 billion per year to developing countries for climate change mitigation and adaptation. Reaching this goal as soon as possible and supporting most affected countries will be absolutely essential for international solidarity and as well as the transformation to a net zero across the globe. So my last point to focus on is 10. Boards can and should play a stronger role in this transformation. That's why we do this webinar for the board members. The COP process provides momentum and direction. But in the end, the decisions and actions of domestic governments, of the companies and the citizens will shape the change and decide over success or failure of this joint endeavor. For boards, this means making bold steps towards sustainability in terms of strategy, in terms of structure and processes. The first movers will benefit from this transformation. One first step could be to establish a sustainability committee on the board and ensure relevant expertise. Especially in Germany, we see that only some supervisory boards have installed sustainability committees, at least up to now. So let me conclude. The German Council for Sustainable Development, together with the National Academy for Sciences, called Leopoldina, has recently developed 14 recommendations on what rapid implementation could look like for Germany in the coming years. Managing the grand transformation and a turbo for innovation at home are the basis for international cooperation. Importantly, the rapid expansion of renewables and its infrastructure are fundamental conditions for the transformation. In Germany, a quadrupling of the current renewable capacities is necessary until the early 2030s. This requires clear frameworks, higher carbon pricing, much faster planning and approval of green projects, and reformed or new international partnerships. Not any country, not any company, nobody can act alone. We need a new spirit of togetherness. And with this, I would like to hand over to Liselotte again. Thank you very much.
Liselotte unfortunately came out, so please, I therefore would like to ask Laura Shaw to join, and let me then start by also trying to share the presentation. Sorry about this, but let's see here.
do you want me to start?
Yes, please do start.
Okay.
Welcome.
Okay.
Welcome.
Yeah. Thank you. Thank you, Dr. Werner, for your very clear and succinct conclusion for us, doing all the homework. It is very clear from your presentation what are some of the accomplishments and what are the major challenges ahead. I came away from, from reading all the reporting on COP26 that we have made a step forward. Although it is, obviously a lot more can be done. I think it is an improvement from COP20, from the Paris Agreement. It is time for more action, and there at least is an outline. I myself am encouraged by that. And I think in my role as the chairman of a stock exchange, I can share with everyone the role of a stock exchange in the climate agenda. First of all, we are a regulator, one of the regulators of listed companies in Hong Kong. And in that role, we have promoted the ESG agenda, the climate agenda, by starting in 2013, providing guidelines for companies for their ESG disclosure. And it was a raising of awareness. And by 2017, we have upgraded the guidelines into more specific rules, so that it is part of the rules that require all listed companies to state in their annual report what they have done in the space of ESG. It's basically comply or explained. And that, of course, get the awareness even higher, because a non-disclosure would result in a breach of the listing rule, which is a condition of maintaining a listing on our exchange. So overall, the market has come to gradually accept the requirement of disclosure. And now we are moving one step forward. It's not only just the disclosure, but we have to help the company, especially the SMEs, to realize in their space what can be done in ESG. So we're providing tutorial and materials to help some of the smaller companies to accomplish what they can within their spheres. So in that regard, we are creating a framework. We are enhancing and really upgrading the ESG profile of many of our listed companies. Then, of course, we are, as a market operator, we create an ecosystem. We provide a framework and also the guidelines and so on for all the investment products, the green investment products, creating this sustainable ecosystem so that people who want to invest in green and green finance could go to a single portal, which we call Stage, where they can find the information. So that is also our role as a market operator. And finally, we are ourselves a corporate. We are a listed company ourselves. So we lead by example, not just by talking about it, but we do take action. And it also, I have to say, that for a listed company, it has to come from the top. The board is absolutely essential in creating an ESG agenda. And I think, the Glasgow Financial Alliance is a good example. The Hong Kong Stock Exchange has joined this Glasgow Financial Alliance for the Net Zero. We are one of the 6 exchanges that join. And we are also have an agenda of our own. We want to come to meet net zero by 2050. And we are advocating in the community strong corporate sustainability credentials. So that's roughly the role of the exchange, specifically the role of the Hong Kong Exchange in pushing this agenda forward. why don't I just stop there and then I can add on other comments later.
Thank you so much, Laura. I think it's fabulous to actually see you both acting, as you're saying, in a regulator role, but also as your own corporate. Not the least, you actually learn a lot by doing that. So I think that's fantastic. Now, I'm super sorry I dropped out on Werner's presentation. That is what uncertainty makes. But now I'm back, and now we'd like to launch a poll for our participants. And we have two questions for you. And the questions are, who will have the greatest impact on us achieving the goals set out in the Paris Agreement? And this is a tough one because you can only pick one. The next question is, to finance your own transition, to get your own company to committed goals for net zero by 2030, how hard will that financing be? Talking about that. We leave that up, and you'll get a couple of minutes to fill that in. Meanwhile, I would like to introduce Magnus, who is relentlessly pushing this topic as well, but also let us know a bit about your perspective. Over to you, Magnus.
Thank you very much, Liselott, and it's a pleasure to be here today to talk about this very important topic in this during this time when we're coming out of COP26. And before I come into the 4 points I have here on the slide, I just want to make some couple of reflections on the outcome of COP26 to start with. I think there's a mixed bag of COP26. I think it's a lot of positive things, and Werner highlighted several of them, but there's also some negative things, I think, that's coming out of it, where at least I had a higher expectation than the outcome showed us. When I read the assessments of COP26 on what are we now, what is the pathway we're on right now, we're clearly still quite far away from the 1.5 degree target that we have, and with more aligned with around 2.4, 2.5 degrees. So still a lot of work to be done. I think it's also important to note that we need stronger support from governments. That's my view. I think we need the subsidies to fossil fuels to end. We need a carbon price so we can properly internalize the externalities of emissions into our investment process and investment decision-making aspect. So that's on the negative side, but there's a lot of positive things coming out of COP26, and I think in particular I would like to highlight the initiative by IFRS Foundation to take the next step in integrating climate data into the financial reporting. That's an extremely important step forward, and that would benefit us as an investor in assessing the sustainability of the investment opportunities out there. I also like to highlight the initiative by the around 100 central banks on the network for greening the finance systems, which is now taking the next step in trying to find a capital requirement foundation or framework for assessing these risks and opportunities that comes out of the sustainability aspect. That will be extremely important for the proper allocation of capital towards a net zero environment. I think, as Werner alluded to earlier, there's a strong momentum within the financial industry today to reach the net zero goal. There's a lot of financial institutions there that have committed to this. There's a lot of financial institutions that have presented milestones to achieve the net zero, and there's clearly a stronger demand for sustainability investment opportunities. I think that's one of the challenges that we as an investor are facing today, the supply side. And in particular, if you look at the opportunities or investment vehicles in the developing world, there's much more to be done in order to enhance the possibility to allocate more capital from the mainstream capital like pension funds, insurance companies. And I think it's good to see that the institutions like the World Bank, IFC are stepping up and trying to scale up the opportunities and also the role they play in attracting and supporting the allocation of capital towards the developing world. So that's a very important thing, and that will help the supply pipeline to grow and become even more relevant going forward as we allocate more capital towards this. One challenge, and which will continue to be a challenge for at least the near term, where we need to see some improvement, is the demand for more sustainability data, and also connected to that, a more clarity and commitments towards transition plans. So if you look at the institutions like the one I represent, Alecta, we believe that we have a competitive edge to be extremely long-term given the commitments we have in our balance sheets on the liability side, basically commitment to pay out pensions in 30, 40 years down the road. We can be patient and we can be extremely long-term. And we think those two criteria are important to transition into net zero society. So, but in order for us to make that long-term commitment and engagement, we like to see from the corporations clear transition plans, what's the journey they're on to and how it's going to play out, and what are the milestones that need to be met in order to ensure that we're on the right path towards this. So that's what we are looking for from the corporations today, and that's the topic we talk with the board of directors today. Please show us the transition plan. If you can show us this plan and make a credible commitment to it, we're prepared to be a shareholder in your company, and we're prepared to be patient and also be long-term shareholder in your corporation. And I think that goes into my third point here. It's very important, I think, today that the boards are supporting and continue to take strategic initiatives on how they're going to transform the current business model into a business model that is future-proofed and that is able to still continue to deliver shareholder value in a net zero society. And I think this is a critical point because end of the day, our assignment as an investor is to deliver value to our end beneficiaries, to create pension for our customers, basically. And I think the integration of sustainability in the business model and the adaptation required in the business model will and should be a key topic for any board out there today. And it's a strategic issue that needs to be addressed. I must say that I'm looking at our portfolio, our equity portfolio. There's a lot of companies that are doing great things out there to address this topic and to change their business model into a future-proof business model in a net zero environment. So progress is being made. And I think what is also encouraging to see is that the driver for this is opportunities and proper risk management. So it's not a compliance topic today on the boards. It's a method or a means to create shareholder value over the long period of time. So that's very encouraging to see. Coming back to the point I made about the central banks and the work to sort of address the risk of failure to transform into net zero society and the risk leading into capital requirements for financial institutions. I think we will see in not too distant future an increase of cost of capital for the ones that are not able to have a plan or allocation of capital towards a net zero environment. And I think that would be an extremely strong impetus for adopting your business model as an investor or a business model as a corporation. We see today a high demand for green investment opportunities. There's significant flows into green equity funds relative to non-green equity funds. We see continuous oversubscriptions on the green bond side, and we see quite significant green premiums in certain products. Now, obviously, that will trickle down directly into the corporate world and will have an impact on the cost of capital for these corporations. And I think when we start to see that momentum grow even further, the speed of change and the speed of transforming your business model and the investment into net zero investments and net zero business model will enhance significantly. So I would just end by that and just say two more comments. I think I'm optimistic. I think the corporates today have this important topic on the agenda. There's a lot of good work being done. More can be done. And we, as an investor, would like to support that. And the reason for that is obviously that we will not be able to reach our net zero goal unless the corporates that we hold shares in are also able to meet the net zero. So we need to work together to achieve this. Thank you very much. I think I stopped there, Liselott.
Thank you so much, Magnus. And I think all you and all of you have actually pointed out the total dependency that we now have between companies, public institutions, and the financial services sector. So we're going to come back to that. But first, I'd like to hear the comments from the Norwegian Bank Investment Management. So please go ahead, Severine.
Hi, thank you very much, everyone. I think this discussion is great, and we all learned a lot already, because one reads many articles on the COP26 and about the political commitments, the sectoral pledges, but it's not always straightforward to see, what actually happened and the implications for companies and investors. So in our views, there is one clear signal that Dr. Schnappaf already highlighted, is that countries renewed their commitment to the Paris Agreement. We've also seen announcements on coal, on methane, on deforestation, which are quite encouraging. So the immediate implication for companies is that they will be under increasing pressure to publish net zero targets and to reduce their greenhouse gas emission. Investors will want to know how companies will meet these targets. And here I'm glad that Magnus and I are saying the same things, because it means investors are all looking at the same direction, right? We will want to know what is the pathway of companies and understand what will be the actual reduction of emissions versus offsets, because not all companies will be able to continue business as usual and plant some trees to offset these emissions, right? My second thought is that we have seen very ambitious declarations and commitments from countries. And now what remains to be seen is how these commitments will be translated into concrete frameworks. And for us as investors, if there is a discrepancy between the ambition of the declarations and the ambition of the upcoming policies, that creates uncertainties for us. And when the policies come, if they are pushed further down the line, they can be particularly disruptive for companies. So I think that's a risk for companies. Another announcement that was already mentioned in this panel, which I think is very important, was on the side of the COP, is the IFRS Foundation decision to create an international sustainability standard board. That's very positive. I think it's going to be helpful for companies to have in the future one global standard to look at instead of lots of voluntary standards and questionnaires to respond to. And for investors, it's very much needed to have comparable data across markets. Now let me tell you a bit more about NBIM and what we expect from companies on climate change. NBIM's mission is to build wealth for future generations of Norwegians. We are global and long-term, and we have a small stake in more than 9,000 companies worldwide. So long-term value creation for the fund relies on companies managing the many sustainability challenges that they face. Our ambition is to be a leader when it comes to managing climate change risks. So we have several tools at our disposal. We can contribute to the development of market standards. We can adjust our portfolio by investing more in companies that contribute to the transition and by divesting from those who have unsustainable business model. But adjusting our portfolio will always be on the edges. What we see as the most important tools is actually active ownership. So we want to stay invested in companies, and we want to hold company boards accountable and positively influence companies. So concretely, what do we expect from company boards? We think the board should have oversight of climate-related risks and opportunities. We think climate change should be integrated into strategy, risk management, and reporting. We expect climate change to be to companies to have clear climate plans that take into account the goal of the Paris Agreement. And as I mentioned, to explain to us how they will reach their targets. I mean, I say that in a conference, it's quite easy for me, you may think, but I understand the immensity of the task for companies. And I think it's not impossible. I think it's a journey, and we're all in the same journey together. So NBIM is patient, but we will want to see evolution on that front. I think probably the biggest challenge of our time, and the future generations will thank us for trying our best. Thank you.
Thank you so much. And before we start the discussion, I thought we can look at the poll results. Can you just nod if you can see the poll results? Yeah, super good. So it's very interesting, I think. And I'm going to ask, I think, Laura to comment first. So on the first topic, you can find that the expectation is that about 40% look to the governments in developed countries, and more than 30% look to the companies to be the big impactor. Now, the thing that's interesting for all of us to look at and how we will work with that, and that is the second question. Where companies actually feel that it's very hard, 20%, fairly hard, 30%, and doable, 35%. So I wanted to ask Laura to start just to comment with having a bit in mind, because we talked about this before also. These are the companies' own views. How will they finance this transition? What do boards specifically need to think about when they are in this situation?
I can't see the poll result.
Oh, I'm sorry.
You know, I maybe it's just me. It was there a while ago, but now I don't have it on my screen.
Okay. So let me just read it out. The second question is around the finance of our transition for our company.
Right.
Whether they actually think it's hard or easy, and more than 20% think it's very hard. Another 30% think it's fairly hard. So more than 50% actually think that it's hard. About 35% thinks it's doable.
My own observation is that it is hard for companies because certainly in this part of the world, in Asia, quite a large number of companies are still grappling with what exactly they need to do to accomplish the goal. I think 10 years ago, when we set the target, when we said ESG, climate agenda is important, people began to understand, and it was a journey, to understand the necessity and why we need to do it. And now they have to do it, and they, particularly some of the smaller companies, are finding it hard, as I mentioned earlier. So I would agree with the poll that it is not an easy task to do. And I think it also, for obvious reason, it has to do with the size of the company. The larger the company, probably the more resources they have, and they could put more, focus on it. And so, oftentimes we hear that accomplishing the climate agenda is a cost factor that we cannot entirely ignore.
Right, thank you. I'll follow on that to Magnus, and you actually said something around that. In order to do the transition agenda, you can't just look at compliance. And I think that's unfortunately where a lot of companies get caught on the reporting side. But you mentioned that the transition plan requires you to look at opportunities and proper risk management. Can you mention something more around that and why you have identified that that is a topic?
Yeah, I think maybe the car industry is a good example here. I mean, that it's an industry which is in the midst of transforming itself, very much driven by the sustainability aspect and the regulatory environment that pushing them forward also, but clearly a customer demand. So, and you see the valuation of these companies is spreading widely depending on how far you come on in this journey, what kind of credibility you have on this. So to me, that's just another clear sign that this is a strategic topic for capturing the opportunities on this transition journey that we're on, and thereby securing that you're able to continue to deliver shareholder value. So I think that's the approach that needs to be taken, and that's what we need as an investor to understand in order to assess basically who to allocate capital towards into the car industry, i.e. who's going to be the winner of tomorrow, who's going to be the one that is leading the car industry in the future. So that's one point. Then I think there's other companies that are in the situation where the customers maybe not clearly are expressing this demand towards them, but where there's an opportunity to sort of pull the demand. And I think that's maybe even more challenging for a corporate, but I think it's important that that is a topic that is on the board's table to discuss. You know, this is a clear trend, it is a global trend. How will it impact our business model? Where will the customers be tomorrow, despite the fact that they maybe as a customer today do not know what kind of demand they will have tomorrow? And I think you see some companies that are really advanced in this area, and I believe they have a great starting point for being able to be a leader in their market space for tomorrow, and thereby secure shareholder value over a long-term period of time. So that's why I think it's so important to get this into the business model discussion. And I fully acknowledge the challenges with this. I'm not sure that the shortage of capital is potentially not the largest challenge, but I think it's very difficult for certain companies to describe what kind of footprint do they have and how are they going to address that, given the, to some extent, poor quality of data out there and the different standards that are out in the market space today. So we need to support the companies to make this thing a little bit easier for them to deliver on the data and the standards.
I think that will certainly help, because it will also give boards an idea of where they have their footprint, so they can also concentrate to get it into the strategy. Before we go on, Cecilia, I just wanted to check if we have some questions from the audience. We don't miss that.
Yes, we have several comments and questions, and one of them is how to ensure that boards not only and companies only set goals and targets, but actually are accountable for them as well. So that's an open question.
I think that's a very good question. I mean, we can take Severin. How do you follow up the transition plans, and how do you work with that?
In a way, holding the board accountable when it comes to how they manage climate is a little bit the same as how they manage other strategic issues. We have, a few tools at our disposal. So we engage with companies. We have a dialogue with companies on these issues, and the dialogue is meant for us to learn and to identify the winners and perhaps the laggard in this field. And it's also to express our expectation that I presented earlier. The dialogues take time. We understand that companies need time to make progress in this area. But of course, there are at some point consequences if the company is not moving, or if they're not moving as fast as their competitors. So what tools do we have? We can vote in favor of a shareholder proposal, for instance, on this issue. We can vote against board members, and we have in the past, or we can divest. That's not our preferred option. Divestment will be for financial reason, because the business model is unsustainable. So we call it risk-based divestment. And I would say that we tend to do that for smaller companies where we don't have a portfolio manager coverage, but otherwise our PMs can also reduce their exposure to the company by selling some shares, not all. These are the options, but it's not a chain. It will really depend on the case.
Yeah, we said that we were actually going to close this with you helping us and actually giving concrete advice to boards. And I think we will keep with these questions and we'll try to interweave them in a blog post that we're pulling up. But now I'd really like to hear your recommendations. And maybe if you've seen some good practices. Werner, do you want to start?
Yeah, thank you, Liselotte. I think most relevant things are already mentioned. Laura said sustainability must a topic for the top management, for the CEO and the board members, the management board, but also for the supervisory board. So both the management board and the supervisory board should align the company on the journey of transformation. The most used word for that is ESG, environment, social governance. And I know in the meantime, a lot of companies, Liselotte, mainly the large companies, the listed companies, they are mainly committed to ESG, but I know also a lot of small and medium-sized companies which have not seen the challenge of the transformation. And if they don't act quick enough, then they will have a problem with the innovative products, will have a problem, the markets will have a problem to finance themselves. Therefore, for me, ESG is the right pattern to develop the future of the companies. And Liselotte, let me add one thing. When I spoke of the new togetherness, what do I mean with that? The company itself has an interest to be successful. Was clear and must be clear in future as well. But each and every company has also to see what's going on, for instance, in the global south. What are the effects on people which don't earn a lot of money? Can they buy an electric car? Can they afford themselves higher prices for heating and so on? So seeing all different aspects, not only the aspects, how can my company earn as much money as possible? So they should also think of the global results of the transformation, the results regarding the low income situation in one's country. So ecologic and social aspects to be successful. And that is what I mean. In order to be as quick as possible and to be as successful as possible in that process of transformation, we need a new kind of collaboration. If you allow, Liselotte, one example, green hydrogen. When companies, for instance, steel companies, chemical companies, want to transform to green hydrogen, they have to know when will be the pipeline, the infrastructure be ready to serve themselves with green hydrogen. So between the government, the states, and the private companies, we need a kind of new collaboration to be on time ready for the transformation.
I think that's super interesting, Werner, because it actually means that when boards used to do strategy, it used to be quite focused, but you still need to do that, but you need to start with a broader scope. Laura, what is your final recommendation?
I think my recommendation is really that we as a society, as a community, we must encourage innovation. The transformation, the transition from a high carbon to a carbon neutral economy throughout the world will require a cheaper and more accessible non-fossil fuel energy. I think that is really the solution. It's pointless to talk about phasing out carbon, which of course we should be doing, if we don't have the alternative, or if the alternative are too expensive, not affordable to a large number of people in the lower echelon of our community. So we have to be realistic. And so to encourage innovation, where the government can perhaps have a role in both in the private and the public side, providing enough finance to increase the speed of innovation, whether it's wind, the newer wind turbine, the solar panel being embedded in the glasses, for example, in China. This is what they're doing. They are going to enact legislation where it will be mandated that buildings after, I forgot the year now, I think it is probably 8 or 10 years from now, then all buildings must have their glasses with the embedded solar panel in it, so that the buildings themselves can generate the energy. But in order for that to happen, this all costs, cost of capital. And so why the private sector will finance it, the public sector, the government will provide subsidy in the innovation part. I think that is the other half of the equation. We can talk about phasing out coal, we can talk about replacing fossil fuel. It's the other side, that making the renewable accessible. That is the solution.
Right. So I'm just going to ask very quickly Magnus and Severin to comment on that. And I really find the topic of innovation very interesting, because historically boards have not been very good in actually facilitating innovation for the companies. So very last recommendation, Magnus and Severin.
3 things. I think 1, start reporting scope 1, 2, and 3. So you can show us as an investor where you are currently on the footprint. 2, establish a transition plan. How are you going to take us to net zero? I think that's extremely important, because by 2024, we expect a reduction of 25% in our equity portfolio. So there will be a key gateway at that point. And 3, the last point is, I think we shouldn't underestimate the power of remuneration. So connect remuneration to these to this pathway. I think those 3 topics are all board topics to address.
Thank you so much. And a final quick comment, Severin.
Yes, you asked me about innovation. So I'm thinking, what we've seen as interesting practice is some companies have put the sustainability function reporting directly to the CEO, or working jointly with the R&D department. Now that's interesting. Otherwise, yes, put the strategy as company board, really have oversight of these issues, put climate change at the heart of the strategy, and look at sustainability issues in a holistic way. Because in this panel, we talked about climate change, but there are, of course, human rights implications in decisions on the climate change transition, and on biodiversity, which could be a whole other conference.
Right. Thank you so much. We are just 2 minutes from closing. We will come out with a blog post on this topic, and we will also bring in maybe some more answers of the things we didn't have a chance to answer to. I hope I've asked the board here to actually come back in a year's time and see what we did. Did we actually move it, and how much did boards contribute? So we'll see if we can do that. We are super grateful, and I will hand over to Cecilia to thank all of you.
Well, first of all, I'd like to thank all our presenters, and Laura, Werner, Severin, and Magnus, and of course to Liselott who moderated. I also like to thank Climate Governance Initiative, the board and secretariat, and the World Economic Forum, as well as you all who participated. We could have gone on much longer, but that is not possible at the moment. So if we just go to what's happening, we will have a blog post why don't you go to climategovernance.org and find your chapter? And for those in the Nordics, you can find Boards Impact Forum. There will be a number of events going forward covering these and similar areas. And you can also find those on the homepage. We will have one in January, on January 13. But you also can visit the Principles for Climate Governance with your board and even make a readiness assessment and see how you fare. So with that, I'd like to thank everyone who has been attending, and I'd like to say be safe and goodbye.
Thank you.
Bye. Thank you.
Thank you very much.
Thank you.